Everybody, I'm Cantonese Cat. Hey everybody, Cantonese Cat here. SOFI, these are 3-month candles, so each of these candles represents a quarter of the year. And the stock really hasn't been around for that long. It's been around for about 3 years or so. The majority of the time we spend really worried and thinking about the stock really has been the last year or two. And that's where majority of the history, majority of the volume actually was spent at. So this is the volume anchor profile. If you want to look for that, it's on the 4th tab right here on Trading View, and you can see this anchor volume profile right here. So if I pull it up, in terms of the anchor volume profile since the inception of the stock, since it became a SPAC as IPOE, you can see that there are a lot of volume being traded up here, sure, but the majority of it, the volume actually is in trading hands is actually down here below $10. So a huge volume shelf, majority of volume is down here, and because the majority of the time is being spent here, there's a lot of friction in terms of the price. This can serve as a lot of resistance and support levels down here, especially around this peak right here, which is around 7.5. You can see that it can serve as resistance, and once you flip that level, it can serve as support. It's been serving as support for quarters number 1, 2, and 3 here after it flipped. And it really has been tested multiple times. It also has tested the resistance about $10 multiple times here too. It's been, quarter number 1, 2, and 3. And I would also argue that quarter 4 has also tried to break above this the top of this volume shelf right around here too. So you really try to spend about 4 quarters trying to break about $10, but unable to do so. And that ended up resulting in a lot of volume price history here. But the more likely scenario here is that I think price is more likely to gonna break up. The reason why I said that is because it just seems like this is a breakout, a pretty clear breakout after a span about multiple quarters underneath, and all of this really seemed more or less a back test, if you will. The overall trend would be more easily visualized if I put some of the other indicators on the monthly and weekly, but the trend overall, if you have to calculate it, is still up, and it gets a little bit more complicated because of this quarter's candle right here. The quarter's candle has actually been quite bearish, and you can feel the bearish energy and a lot of negative sentiment that comes along with it, with the stock. Everybody's basically been trashing the stock, especially their momentum traders. And sure enough, I mean, this is a pretty high volume red candle here for this quarter. It's not a great look. The matter though is that it did spend about 4 quarters trying to break about this range. And when you have a hard time pushing above, sometimes bulls just get exhausted and sometimes they just need to take a break. And sometimes bears can really change the narrative and try to bring it down. But the key thing is still finding support right here at this key support level right here. This is the biggest support level, or the biggest resistance level we break down that we have so far for the stock. And right now bulls are holding. And that's something that's very, very important to think about. Now, if you look at it a little bit closer, you look at the 1-month chart, it gets a little bit more complicated in terms of trying to figure out whether or not it's a bull trend or a bear trend. Because if you just look at this, you don't know. I mean, obviously right here it's been forming, a little bit of a higher high, higher low. And it's been forming some higher high here, a little bit of a higher low here. But then it starts to becoming, kind of like this lower high and higher low kind of thing. It's been a little bit difficult trying to decipher what trend this is. There are a couple of indicators that can help you. One is, you can always look at the Bullish bands, which comes with a 20-month moving average. The longer price span above the 20-month moving average, the more likely it's going to stay in a bull trend. The more time spent underneath the 20-month moving average is going to end up more likely to be a bear trend moving forward. As you can see, over the last couple of years or so, it's been spending majority of the time underneath, and then it really had a clear breakout back into the top part of the Bullish band here on the monthly. Really started around June, And since then, price has really been staying above over here. And I get a little bit scary down here for this quarter because it really looked like it was about to break down. But I really wasn't that scared about it. The reason why I really wasn't that scared about it breaking down was because the 20-month moving average was pointing up. And when the averages point up, more likely they're going to serve as better support than they are resistance. It just goes with the trend. So because the 20-month moving average is pointing up, that tells me that this is going to be far more likely to be a bull trend than a bear trend. And also because price has been spending around time on the upper part of the Bollinger Band, that also tells me this is more likely to be a bull trend rather than a bear trend. There were a couple of things that are a little bit worrisome here on the monthly chart. I'm not going to lie, of these big giant red candles over here that actually has pretty high volume. But the thing about these high volume bands is like this one right here, it never even broke beyond the green candle before that. So this is really an inside candle. This is also another inside candle. This candle here, it breaks a little bit down below, but technically if you just look at the start of the candle and from top to bottom, technically this is also a little bit of an inside candle over here. So it's just all it means is all this is basically meaningless. All of this basically tells you is that there's a lot of consolidation that's been going on for the last 4 months. The consolidation is happening above the median here, above the 20-month moving average, and 20-month moving average is pointing up. So this tells me that this is still a bull trend. Can it be at risk for developing a bear trend? Sure, if price broke down below and ended up staying here for a couple of months, I think it's going to turn. But so far it's not doing that. So far it went back for a back test over here, again, of the 20-month moving average, and so far it looks like we're holding. So far this still looks like a bull trend. The other thing to look at too is the Ichimoku cloud and see whether or not the Ichimoku cloud is able to tell you anything. One very good thing that could happen that would support a bull trend, would be very, very bullish, is you have two lines here. One is Tenkan, the other one is Kijun. Tenkan line is the leading line. Kijun line is usually a little bit lagging behind. So one thing is if you end up having Kijun crossing back above the, Tenkan crossing back above the Kijun, the leading line crossing back above the lagging line, generally you have a more than likely a bull trend. Now, you did have that happen over here this month. We actually have a bullish Tenkan Kijun cross right here, which technically does signify that there's a potential for it to be a longer term bull trend. The only problem though is usually when something like this happens, for it to be extremely bullish, for it to be really, really nice, for it to be a very, very clear bull trend would be if the price is above the Tenkan. You can see that when Tenkan is support, generally it can serve to push the price up higher. But unfortunately, over the last few months or so, we broke down below the Tenkan. We tried to break back above it, but so far it's still serving a little bit as a resistance here. Ideally, things would turn a lot more bullish if we're able to really truly push back above the Tenkan and backtest it, and allow Tenkan to really push us up further up. That would be ideal. Now, with that said, there's also something that's still pretty bullish to me when I just look at it. One is, if you just look at the Tenkan, it's been doing a little bit of like step up over here. This step up basically telling us that the Tenkan line is far more likely to serve as moving forward as support than resistance. This stepping up right here does cast doubt as to whether or not it's going to be very good resistance at all. It does make me wonder whether or not the price is just be temporarily suppressed. I do see a bullish cross right here. It does make me wonder whether or not over the last couple of months price has just been suppressed when a bull trend seems to be developing. Now, there are a couple things that are kind of counting against that. One is there is a red candle over here. There's another red candle over here that have pretty decent high volume. It does make you worried a little bit. The month is still not over, so I don't know what the month is going to hold over the next 5 trading days. For the month of March over here, with this candle closed right here, you have 5 more trading days to really try to figure out what's going to happen. We don't know yet. But the monthly so far, based on 20-month moving average pointing up, starting at support, based on the bullish Tenkan Kijun cross, it does seem that the trend seems to be up, and also the fact that Tenkan is making these kind of step ups, it does make me think the trend tends to be up rather than down. And that even though it serves decent lines right here serve a resistance right now, I'm not sure how long resistance would necessarily last. But it's a little bit scary when price is underneath of it. And, that's just what it is. The key thing, though, is that I have a few pieces of evidence that really makes me think that, hey, this is a very nice basing behavior. There are quite a few things that are pointing towards the bullish direction. I don't like chasing. I actually like to buy a combination of strategies. One strategy is I do chase. For example, I did end up chasing the semiconductor sector because I think that probably has ways to go. I am chasing QQQ. I buy QQQ every week. There are a lot of things I am chasing. The Bitcoin miners, they've been making higher highs and higher lows, and I've been chasing because I still think that the big move still hasn't happened yet. For SOFI, this is more trying to look and see, yes, it's establishing a pretty nice base, and I think that there's potential for price to go higher because of that. Even though there are some conflicting information to kind of give you otherwise, I still think that there are more things pointing to the bull side rather than the bear side. One other thing to also look at too, just if you just take all these kind of indicators out, all I see a big circle right here as a cup, right here. And I see a smaller cup being formed. And I see that, there's a cup right here that's being formed over here. So I see a bigger cup and a smaller cup. I see more of an accumulation pattern. The volume over the last, 3 months is not necessarily suggestive of an accumulation pattern, but I'll show you something that might potentially change your mind on the weekly chart when I get there. So this is the monthly. I think I kind of beat it to death here with the monthly. Let's look at the weekly. Right off the bat, you can see that it's been making a very, very similar fractal over the last, let's say, 9 months or so, compared to the time immediately before that for the whole year. What I mean by fractal is I see that you have a little bit of peak right here, you have a little bit of peak right here, and you have a higher peak right here. And matter of fact, I think this actually looks a little bit, kind of like a U shape right here. And then here it makes a V. So this is technically, there's a name for it. If it's the reverse way, if this is more like a V and then there's a U, generally we call that more of like a Adam and Eve kind of pattern. But here you're seeing more of a U and you see a V right here. So technically there is such a thing that exists called the Eve and Adam pattern. Basically all it means is that it's a double bottom pattern before bullish continuation. That's basically what that means. Now, over here, it makes a U, makes a V, and from the bottom of the V right here, nobody thought that it was going to go down that low, and when it did, it really was very, very scary. But after it made that V, it had some pretty sick volume coming in to push price all the way up to here to make it to the next channel or horizontal, support, if you will. Over here, it made, a little bit of a high right here, kind of like how it made it a little high right here. And then it pushed up even higher. This right here looked very similar to that. It made a U. And this right here is also very similar to that too. The whole structure looks very similar. The whole structure on this downward trend looks very similar. And also made a downtrend over here as well. And this structure is also very, very similar. It made actually the same level, the same number of down moves and up moves, down, bear flag, down, and then it went down pretty far. Everybody got super scared. The sentiment was absolutely horrible over here. Matter of fact, when this happened, I think everybody was worried like banks are going to fail. Now, next thing you know, though, the service is springing and push price all the way up to like something crazy, like like $11.50. It's doing the same thing. Down, flag, down. Everybody thinks this is going to be a flag. I'm not sure. I mean, this look very, very similar to where we're at over here. I'm not saying that at bottom, it could very well go down further and make an equal low, which is going to be around $6.50. But so far, this pattern right here looks very, very similar to that pattern right here. If you even just look at the volume, it looks very, very similar too. Now, you do have a little bit more of a selling over here. But the majority of the fractal, let's say look at this last move, last 3 weeks, right? You have a pretty decent buy volume right here, but before that it was preceded by 2 weeks of downward selling volume. Selling volume seemed to be a little bit exhausting. If you also look at a very, very similar analog as we do over here, you have a pretty decent buy volume here. Before that, it spent 2 weeks with a pretty bad red candle, but the volume was exhausting. We have very, very similar signature over here. I wonder whether or not this could potentially serve as a spring, or maybe it can go down a little bit lower, and wonder whether or not it can potentially serve as a spring to push price up. This whole thing is a pretty interesting fractal that I'm seeing. Now, the other thing too is, let's look at trend. How can you tell the trend if it's just kind of been going sideways? Well, you try to use a number of moving averages to see if they're stacking together at the right side. I like to use 20, 50, and 100. So far, you already have all these 20, 50 bullish cross right there. The interesting thing is too is SOFI, whenever these bullish crosses happen, bearish things happen on the short run before really bullish thing happens. Right? You have another bullish cross area between 20 and 100. Again, bad things happen before bullish things happen. Over here, you did have a pretty bullish cross between the 50 and 100, but anyway, it doesn't really mean anything short term, but it could mean something longer term. Right now, you have a weekly bull trend, 20 stack about 50, stack about 100. 100 is sloping, turning from a negative slope now into a positive slope. You're going to end up getting a lot more support. And these upsloping, like 50 right here, is not going to serve as very, very good resistance moving forward. This is setting up as a condition where there are some high volume buying. It could potentially end up eating through all of these moving averages. And they can also potentially be kind of a little bit like a Swiss cheese, and they can just slice through right all over them. I am seeing a pretty decent setup here. A lot of times, stocks like this that has a pretty high hype, there's a lot of open interest. There's a lot of people who are shorting the stock. There's a lot of people who are looking to, long in stock. They just like to do a lot of these kind of shakeout. The shakeout can often be a lot more cruel than what you would think. For example, when everybody was kind of shorting here, nobody thought the price was going to go up to like 15 point, like what, 7? Sorry, 11.7. I wish it was 15.7. Nobody thought this price was going to go up to like 11.7. It was very, very extremely painful for bears who bought down here. Same thing over here. They had a pretty good earnings, right around January. Everybody was super bullish, but next thing you know, the market makers just push the price up, and then next thing you know, they just kind of ate everybody's longs, and it pushed price all the way back down here to test some of the lower levels down here. Good thing is following some pretty healthy technicals. The bad thing is that when these things kind of happen, it really has been very demoralizing for a lot of bulls, which I like. I actually like to see bulls being demoralized and actually see people kind of crapping on the stock. But anyway, it's been making some pretty healthy moves. It's found this support right down here at the 100-week moving average. It's forming a little bit of like a tweezer bottom down here, which I like the look of this. It also had a very, very similar kind of tweezer bottom down here too. And before bounce over here, there's a lot of these kind of tweezers over here. They got a little tweezer right over here too. And the same thing, if you look at tops generally form these kind of like, tweezer kind of look too. So I like the way that it looks right now, not to say that it necessarily has bottom, but I just like the way it looks. And another thing I was kind of looking at too is the Ichimoku cloud. Now, when you look at Ichimoku cloud, all you have to know is that this cloud over here can serve as either resistance or support. Generally, when it's red, it serves as a pretty bad resistance. But generally, when it's green, it serves as more of a support and less of a resistance. It didn't really serve as very good support over the last couple of months. Again, price just kind of broke down below the cloud again. But I still think that because the cloud is thin, because the cloud is green, I still think this is probably not going to serve as a very bad resistance moving forward. You're always going to have these moves where it just looks like it had a breakdown and you should sell out of the stock. But if you that's kind of how they fake you out, I think, because otherwise it would have just bounced right here. It would have been a little bit too obvious, and it would have been a little bit too easy. Right now, it's actually down here at this level. It's probably doing a little bit of consolidation here. The volume is telling me that I think the price is stabilizing. The Tweezer bottom is giving me a lot of encouragement, thinking, hey, maybe we're at a pretty decent level here for bounce to happen. It could potentially bounce here. It could potentially get rejected at 8, and it can go down further. I don't know. We'll see what the volume shows, right? Like this volume right here. If you're thinking that it's going to get rejected here, you would have been wrong, because the volume just went crazy. So we'll see what the volume is when it turns out that this could be end up being the bottom. We'll see what the volume is when it pushes throughout. No guarantees it could go down a little bit further, but I like the odds over here. And one other thing too, I just want to show you, like, you have these kind of breakdowns that look like they're going to stay breaking down for a long time, but next thing you know, it just turns out to be a little bit like a fake out. One example was, if you look at like the bull market support band for Palantir, it spent about 5 weeks underneath the bull market support band. That's flattened. There was a lot of fear that it was just going to slip down and go underneath because of this breakdown, but ultimately it turned out to be a fake out. Another stock that I also want to show you that that really reminds me of a pretty bad fake out is Shopify. One of these really bad fake out is this. This looked like a very clear inverse head and shoulder pattern here, with a neckline right around here, right? So if you actually just draw a rectangle, and you think, hey, the neckline is here, these are where the wicks are located, and then when it went back above it, when it actually broke through this, came back down, you would think that it would be able to find support in the neckline, right? No, it went down further. So is the neckline, should that be fair and not use the wick as the neckline? Should I use the top up right there as the neckline? Would that be more fair? You could do that, but next thing you know, price still kind of broke below it. There's a lot of fake out that happens. I think the market makers like to kind of test price into extremes to make sure that we're able to shake out everybody, build a good foundation before its bullish continuation. I get the feeling, again, none of this is like absolutes, right? But I get the feeling that's what the market makers are trying to do here, especially when this fractal looks so similar to the other fractal over here. Like this structure right here, which looks a little bit like a diamond, looks very, very similar to this structure right here. I don't know. I mean, I think they're trying to fake us out, and the fact that global liquidity is coming in hot, the fact that I think inflation continues to go down, the fact that I think that the fundamental of the stock itself continues to improve, this makes no sense. Another thing I also want to make sure that you know, I also talked about on X too, that makes no sense, is this unbalanced volume thing. Unbalanced volume tells you how much buying pressure or selling pressure there is. Over the last couple months, there has been a lot of buying pressure behind the scene, and you'd be looking like, what are you talking about buying pressure? You have like all this like selling candles over here, a big volume. What do you mean by that? Well, this doesn't lie. There's a lot of buying pressure, and price had gone down despite of this buying pressure. This is what we traditionally call a bullish divergence, where price goes down, but the indicator that's underlying this particular time is the OBV, the unbalanced volume, is going up. This doesn't make sense. I think this bearish momentum is breaking, and look at how big of a bullish divergence there is. I think there's a lot of loss of the bearish momentum right here based on the OBV indicator. Now, if you're questioning this unbalanced volume and saying, oh, there's a lot of buy pressure here, and how come you have a bunch of big selling volume candles over here? I think it's more helpful to kind of break into a little bit of the daily to see what actually happened. There's huge buying volume here. That was negated by the selling volume over here right afterwards from the earnings. To me, I think this is probably like net even, maybe even a little bit more positive. But if you look at it weekly, they just count this big volume candle right here as a red candle. Over here, there's also, a pretty bad selling pressure over here, but overall, you still have pretty decent buying that happens, right around here. So I actually think that the balance is quite equal. So I think that there might be a little bit of misrepresentation in terms of these, big red candles over here. Regardless, OBV is up, price is down. There is a bullish divergence. I think that we are potentially going to be benefiting from that. And that could be what is going to serve as the momentum for us pushing price up. I'm going to end up just getting a little bit closer to the 30-minute video, which is a little bit too long for some people to just talk about a single stock. But I want to talk to you, though. I'm going to finalize it with just looking at the daily here. If you just look at the daily, and if you look at, okay, so what's the daily trend? You're going to see that the daily trend is actually bearish, like 100s over 50s over 20, 20s pointing down, 50s pointing down, 100s pointing sideways to up. But these are all stacked against the bear side, right? So if you look at that, you're like, oh, no, I don't know. I think it's going to be like, it's going to plummet because it's got a daily bear trend. Like, it doesn't work that way, especially when price has been oscillating for like about 6 to 8 months. If you get a bearish trend, it doesn't really mean anything on the daily. You want to look at higher time frame. You get a bearish trend over here. What did price do? When your price, it didn't really do too much. It just kind of went down. It's towards the end of this channel. It's like a little bit delayed here. You want to look at the higher trend to really be able to tell you where, how prices are going. You see over here, you had a bear trend. When ends up happening just within a couple of weeks or a few weeks, price went parabolically up, right? Same thing. It's not. You can look at the bear trend more if you're really at the beginning over here, but when price has just been oscillating sideways for like a year, like here for like a year right here, when you get a full bear trend, it doesn't really mean anything anymore. Like, it loses meaning. The other thing I want to show you here on a daily too is that this structure here, if you look at the details of it, the structure here look exactly like this. There's like no difference at all. If you just look at zooming in here, there's a little gap down over here. There's a gap down over here. You see that this level right here, there's a gap down here, there's a gap up here, there's a gap down here, there's a gap up here. Like, these are the exact same structures. You see there's a gap up over here, there's a gap up over here. These are the same exact structures as it was before. Like, there's really no difference between these two structures here. I don't know. I mean, like, this seems pretty fishy to me if you're a bear. I think they're trying to screw us. I think they're trying to trick us. And how I know is because there's a bullish divergence between here and here over the last couple of months. Even though the earnings was really good, price went down, but the on-balance volume goes up. It just makes me think a little bit harder. Anyway, thank you for listening. It's been getting close to 30 minutes. Thank you for listening. I'm sorry this video is a little bit long. I just want to spend some time to share my thoughts on SOFI. A lot of times it's better to just talk it through with you, show you what I'm thinking, rather than just making these little Twitter X posts. Thank you for listening. Have a good one. Bye.